Tips on Buying Your Home, presented by DiBella. Keep your money where it is. It is not wise to make any huge purchases or move your money around 3 to 6 months prior to buying a new home. That includes buying a car or opening up any credit cards. You don't want to take any big chances with your credit profile. Lenders need to see that you are reliable and need a complete paper trail so you can get the best possible loan. If you open new credit cards, amass too much debt, or buy a lot of big ticket items, you are going to have a hard time getting a loan. Your debt to income ratio will limit your amount you could borrow. Qualify yourself. As a buyer, you already know how much you could afford to spend monthly. You can find out how much you pre-qualify for by going to our free calculator at www.eramortgage.com. By calculating debt to income ratio and factoring in a down payment, you will have a good idea of what you could afford both upfront and monthly. Though there is not a fixed debt to income ratio that lenders require, the old standard dictates that no more than 28% of your gross monthly income be devoted to housing costs. The percentage is called the front-end ratio. The back-end ratio shows what portion of your income covers all monthly debt obligations. Lenders prefer the back-end ratio to be 36% or less, but some borrowers get approved with back-end ratios of 45% or higher. Find out what you could afford, and then you could back into everything else. We know the money you have available to put down. We know the monthly payment, and we could solve the equation for the third variable, and that is the home price. Get pre-approved by the bank. There's a big difference between a buyer being pre-qualified and a buyer who has a pre-approved mortgage. Anybody could get pre-qualified for a loan. Getting pre-approved means a lender has looked at your financial information and they will let you know how much you could afford and will lend you. Being pre-approved will save you a lot of time and energy so you are not running around looking at houses you can't afford. It also gives you the opportunity to shop around for the best deal and the best interest rates. Do your research. Learn about junk fees, processing fees, or points, and make sure that there aren't any hidden costs in the loan. In today's market, sellers usually don't entertain any offers from buyers without that pre-approval. You will lose out on a bid on a house to the other bidder who has the pre-approval. Loan qualifications. One old rule still applies. The higher your credit score, the lower your monthly payments. Below 660 or 680, you're either going to have to pay sizable fees or a higher down payment. That's pretty much the cutoff score for getting a mortgage. While there are many qualified borrowers in the 580 range, the market today is probably looking for 640 to 660 at a minimum. On the other hand, a score of 700 to 720 will get a good deal, and 750 and above will garner the best rates on the market. Improve your chances by getting your credit score reports and ensuring that you're not being unfairly penalized for old, paid, or settled debts. Call me for a free credit report recommendation. Organized documents. When applying for mortgages, home buyers must document income and taxes. Typically, mortgage lenders will request 2 recent pay stubs, the previous 2 years' W-2s, tax returns, and the past 2 months of bank statements. Every page, even the blank ones. Buying a home can take a long time, but knowing what you need and where to find it can save you time when you're ready. If you're receiving a gift money for the down payment, please call me for instructions in order to save you time and aggravation. Don't try to time the market. Don't obsess with trying to time the market and figure out what is the best time to buy. Trying to anticipate the housing market is impossible. The best time to buy is when you find your perfect house and you could afford it. Real estate is cyclical. It goes up and down continuously. So if you try to wait for the perfect time, you're probably going to miss out. Bigger isn't always better. Everyone is drawn to the biggest, most beautiful house on the block. but bigger is usually not better when it comes to houses. There's an old adage in real estate that says, don't buy the biggest, best house on the block. The largest house only appeals to a very small audience, and you never want to limit potential buyers when you go to resell. Your home is only as good to go up in value as much as the other houses around you. If you pay $500 for a home and your neighbors pay $250,000 to $300,000, your appreciation is going to be limited. Sometimes it is best to buy the worst house on the block because the worst house per square foot always trades for more than the biggest house. Science of bidding. Opening bids should be based on two things: what you could afford because you don't want to outbid yourself, and what you really believe the property is worth. Your opening bid should be something that's fair and reasonable and isn't going to totally offend the seller. A lot of people think they should go lower the first time they make a bid. This all depends on what the market is doing at the time. You need to look at what other homes have gone for in the neighborhood and get an average price per square foot. Sizing up a house on a price per square foot basis is a great means of comparison. Today, so many sellers are behind in their property taxes, and if you have that valuable information, it gives you a better perspective to negotiate a good deal. To find out, go to the county clerk's office of that municipality. Sellers respect a bid that is an oddball number and more likely to take it more seriously. A nice rounded number sounds like every other bid out there. When you give the seller a more specific offer, they will think you are giving the offer careful thought. Stalk the neighborhood. Before you buy, get the lay of the land. Drop by morning, noon, and night. Many home buyers have been completely distraught because they thought they found the perfect home. They later find out that it wasn't for them. Drive by the house at all hours of the day to see what's happening in the area. Do your regular commute from the house to make sure it's something you could deal with on a daily basis. Find out how far it is from the nearest grocery store and other services. Even if you don't have children, research the schools. It affects the value of your home in a very big way. If you buy a house in a good school district versus a bad school district, even in the same town, the value could be affected by as much as 20%. Selecting a realtor versus agent. Look for a certified realtor. While many people believe a realtor and a real estate agent are the same thing, the only real estate agent with the title realtor after their name actually belong to the world's largest trade association of agents. Officially, realtors earn more industry credibility since they must pass certain eligible tests, abide by a strict code of ethics, and participate in annual extended education courses to belong to the group. Selecting a company. Consider working with a nationally franchised real estate agency. These offices tend to have bigger advertising budgets than independently owned firms. Check references. Check their websites for testimonials for previous clients. Consider the agent's experience and capabilities. Many people receive real estate licenses each year, but only a handful make it a lifelong profession. The ideal realtor has several years of experience. Avoid agents representing both buyer and seller. These individuals are known as dual agents and are technically supposed to work for both buyer and seller's best interests. Since human beings generally have a difficult time exercising impartiality, opt to work with an agent whose commissions hinges on their willingness to fight for the buyer's best interest. And now, a little about me. I have been involved in real estate for over 30 years. I started my career as a real estate broker in Brooklyn, New York, and moved on to residential and commercial appraising for the city of New York. I became an assistant vice president of Greenpoint Bank and then advanced to vice president of Emigrant Bank. I worked as a mortgage loan officer for the Money Store and then ended my last 7 years of banking career as vice president of JP Morgan, selling and managing real estate. Currently, I am the director of REO and a realtor for ERA Properties Unlimited, located in Princeton, New Jersey. I thank you for taking the time to listen to my presentation and hope it was useful. Please contact me at any time for all of your real estate needs, and remember, You could always reach me at 844 DiBella.